Good morning. You're watching The Market right here in 18 now with me, Aisha Faridi, Avan Dabash, Nikunj, Dalmia in the studios. And just in case you missed our Muhurat session last evening, here's wishing all of you a very happy and prosperous summer 2080. Happy Diwali once again, guys.
Happy Diwali to everyone in the 18 family.
Yes, you're looking sleepy, is it?
No, I did not have a late night on Diwali. But aren't you wondering, Nikunj, why the markets are open today?
No, look, there is a reason why it's open. And, you know, there is a holiday tomorrow. Yes. And because as per the Hindu Tithi, the New Year is actually tomorrow.
Yes.
So the holiday is on account of a New Year tomorrow, which means that we celebrated Diwali last night. We'll be working hard today. Then from office, we can go and celebrate the New Year, take it rest tomorrow, and Wednesday we can be back to work.
Yeah, but we definitely need more holiday. I mean, Diwali doesn't really feel like a holiday. We need more.
Just a coincidence. Normally the New Year is always the next day. But this time, Diwali came on a Sunday, Monday is working, but Tuesday is off.
But at least yesterday we hit a positive note in the Muhurat trading session.
Fortunately, the small cap index once again hit an all-time high with all the conjecture on whether small caps are getting frothy and all. It closed the year in style.
It closed the year in style. It started the year in style. That is also more important. And what is important here is that the year gone by in a sense has made everyone happy. The SME investors hit out of the park. The small cap investors, they saw deep swell in their portfolio. The mid cap investors, they had a good time. And large cap investors, you can argue that, returns were not as gratifying as what the small cap index was. The returns were still positive nevertheless. Now, as you walk into trade this morning, it's not about global cues, frankly, because Indian markets traded yesterday. GIFT Nifty is indicating that it will be another, a good start. I think it is the Morgan Stanley report. And boy, oh boy, Rhythm Desai, well, he has come out with a scenario of 14% upside to the Sensex by December 2024. So, this is like the happy new year you want to start with. The house of Morgan Stanley, which has been very vocal, Rhythm and his team, they've been talking about why they like India. And now they're making a case that while they like India, but sooner than later, post-elections, foreign investors would say, we love India, and they will be forced to make a comeback. Very powerful report, we'll talk about it, but it's a great way to start your year.
Yeah, absolutely, and bullish targets coming in. In fact, let's just highlight, what the contours of the Morgan Stanley report as well are. While, of course, lots is happening at a global stage and you've got Moody's cutting US credit rating now to negative, all cheer seems to be for India, while they're not taking away the fact that, it could be a volatile year, 2024, with a lot of unknowns and a lot of event risks as well in there. But they're saying that India is their key pick within emerging markets as well as the Asia-Pacific region, saying that improving returns are only going to aid further momentum into India. Upcoming elections, of course, are going to be a point of high volatility, so they're not really taking away from that. And they're saying that, they expect equities to rise into 2024 elections. Markets are likely to price in continuity and majority government, and they see a 14% upside in the Sensex alone by December 2024.
Yeah, and they're making a case that Indian markets will actually trade above the long-term averages.
Yeah.
So while the structural pillars of the Indian bull market, which is macro stability, strong relative and absolute growth, given what the Indian economy in terms of positioning is, India's 40K1 moment, which is the SIP culture and the flow of local money. There is consumption boom which is at play, and there is a strong capex cycle which I think is evident. So these factors are not new. But what they are now making a case is that there are two catalysts which you have to understand, which would be the differentiating catalyst for 2024. And that would be number one, elections, and number two, earnings. Their view on election is that in the short run, the state elections results in the month of December of 5 states could create volatility, especially if BJP loses majority. And then, of course, the key could be the 2024 election. So volatility could really be the name of the game. That is what they're making a case. On earnings, they are making a case that FY24, FY25 earnings would be strong. If earnings are strong, and if they expect that the companies which they track will have a growth of 15 to 20%, then we are looking at a serious bump up driven by earnings and driven by some P expansion in next 2 to 3 years.
The overweight stance from Morgan Stanley, as Nikunj flagged off, consumer discretionary, financials, of course, industrials and technology. And the focus list has changed with a replacement of Titan and SBI cards. Now, instead, it's going to be DMart and Reliance Industries. So that's what Morgan Stanley is flagging off. But that aside, while, of course, we seem to be in holiday mode and, of course, the festivities are all around us, it is important to track some other events as well. We'll be watching out for the CPI number, the WPI data as well that comes out tomorrow across the globe as well. You've got the CPI numbers from the US as well as from the UK. Initial jobless claims will be important, and there will be some other key cues that the markets will be tracking. That, and then, of course, I think something, Nikunj, that we've been talking about, like a broken record perhaps, the liquidity situation, the fact that despite the fact that off late we've had FIIs that have remained net sellers, look at where we are, a lot of support from the domestic investors.
Yeah, so frankly, if you ask me, there's nothing fresh to add in that perspective, given the fact that, now everybody is talking about it, whether it is the SIP culture, whether it is the flows which are coming by the PMS scheme. That I think has really been the linchpin or the hallmark feature of in terms of where the market action, where the market support seems to be coming from. And I think this is just the beginning. I mean, we've talked about this data, that you look at the number of OTT accounts, look at the number of food delivery accounts, but look at the number of active DMAT accounts, and look at the number of mutual fund folios. The number of OTT accounts in India are north of 25 crores. The number of food delivery accounts, well, they are about 25 crore plus. Number of mutual funds, they're less than 5 crores.
Yeah. And what happens if it even gets remotely close to the number of OTT accounts?
Then Sensex will not be here.
Exactly.
That I can guarantee.
Yeah, they're not looking at just the 15% upside, but their target is going to be breached pretty soon.
And then Morgan Stanley bull case will come out.
Yeah, I was just going to say, then that strategy is not going to work out.
But see, today, you may not see too much of price action. It's going to be, it's just going to be one of those days where listless, some would trade, some may not trade. But in terms of a theme, I think for next 2-3 days, on WhatsApp groups, on social media, a lot of brokerage narrative. What we'll discuss in our newsrooms would be what were the Diwali sales.
Yeah.
I mean, numbers are floating around that how much gold was being sold. Numbers are floating around, what were the long queues outside Titan. Numbers are floating around, what happened to the firecracker sales and what happened to, in general, the small town activity in terms of gifts and dry fruit sales. So I think the next 2 days, we've been talking about a bumper Diwali. In terms of the consumer spend, I think this is the time when next 2-3 days data would come. And expect the uptick actually would be much higher in discretionary.
Yes.
So discretionary, small token, things which you typically buy on Diwali, I think those numbers for next 2-3 days could really keep the market warm.
Yeah, let's keep our fingers crossed, but that's not quite the case with the rest of the globe. Vinny's here with all that's transpired while we were busy celebrating Diwali. Vinny?
Absolutely, a lot coming in from Fed in terms of the commentary and couple of commentaries there, and similar rating and similar thing that they're talking about is that the higher rate hikes is something, higher rates is something that could stay. So let's first talk about Fed space, who's highlighting in terms of inflation that has remained sideways. What is working out is yet as of now the pause that was taken that is supporting the inflation, but furthermore there is a tightening. If they require to take that, they would take the tightening further as well. Policies exerting some bit of a modest pressure on inflation, and FOMC must act very promptly if they see that inflation is increasing. Then you have to take the actions, and these higher rates are something that could stay for some bit of a time. That's the word coming in from base. Other than that, we have Fed's woman also, who is highlighting in terms of she's repeating herself that they expect further rate hikes are needed as well. She's saying that they are monitoring the yields as well as the financial conditions and closely watching liquidity. Treasury market is, as well as how that is functioning, is something that one should watch out for. Lastly, we have commentary that is coming from Peter Schiff, and this one is on Moody's lowering its rating outlook for the US Treasuries and to the negative from a previous stable rating. So what they're highlighting, and these risks are quite obvious for years from the Treasury side, and that should be rated as junk. And if one holds them till maturity, you're guaranteed to make a losses. That's what Peter Schiff is highlighting. It's either a default or inflation. That's the key that one is keeping out for in terms of the Moody's lowering its rating for the US Treasuries.
All right, thanks very much, Vinny, for highlighting all of those global comments. So that's the view coming in with respect to US Treasuries, what the outlook is on rate hikes as well as inflation. That aside, let's find out levels to track on the frontline indices. And we've got Naresh with Mirani joining in, as well as Kunal Bothra right here in our studios. Kunal, up all night playing cards, is it?
No, I think there was Pujan at the house in the night, so I think that kept me busy.
Yep, okay. But
Have
either
you
way...
ever wondered that Diwali is supposed to be when Lord Ram came back? Right? That is called Deepavali, right? You
No, actually my Pandit told me something another. So Diwali was celebrated even before Ram came to Ayodhya. It was actually in the Samudra Manthan when, the 14... No, Samudra Manthan, there were 14 different which had come out, and Lakshmi, goddess Lakshmi, she married Narayan, and that was the time when Diwali started to be in fruition. And then everything else coincided. Ram coming to Ayodhya on Diwali, Narsimha doing this thing. So that was also on Diwali. So a lot of different...
So
but I wonder why they play cards. What's the connotation there besides making money? But someone loses.
Someone wins.
Yeah.
But, Devdutt Patnaik gave us a very logical kind of, connect. And he said that, look, Diwali is also the mark of harvest season.
Yeah.
And, please bear in mind that we were in agrarian society. And that is the time when the harvest or the new harvest actually would hit. And that's the time you would actually start a year, because it's an agrarian economy. So for an agrarian economy, the beginning of the harvest season, it used to mark the new year. As a child, being a Marwadi, I still remember Diwali used to be, I would go to dad's office, spend time with elders, and we would actually start. It used to be a new year for us because I'm from a business community, and you would write what would be called as a Bhai Kata.
Yeah.
So you would actually write some Lakshmi sloks and all. But those are traditions. Some traditions are challenged, some traditions are being followed. But yes, I mean, nothing like a good, fun Diwali with family and good food. That is what I always look forward to now.
Absolutely. Celebration and joy all across. But Kunal, is the year ahead going to give us all celebrations, all joy?
Yeah, I think, this year so far has been very resilient for our markets. We've been discussing this point. I don't see any reason why we should be, going backtracked on the index movements. I think the only concern for the market so far is the lack of large cap names, or maybe a few odd sectors which are not participating. But I think that's part and parcel for every trend on the indices. Last year it was the IT which was dragging quite a lot as compared to many of the other sectors. So, that could probably play out, as a phase for the indices. But I'm very bullish on the index trends. What you've seen in the mid caps and small caps in the last 6 to 9 months, I think could probably be an indication that this could be a major risk on rally for our markets, across the board.
Give us a level, Kunal, then. What is it that by the end of next Samvat we'll be looking at?
So I'm actually looking out for 22,000, 22,500 on the Nifty, say by end of this financial year 2024. So that could be around 50,000 odd for Bank Nifty, which is around 15% from current levels, and 22,500 for the Nifty.
This has the same target. You both spoke?
Okay. No, not yet.
Coincidence.
All right, just reinforcing that bullish stance there. Naresh, morning. What about you? What's the view on the markets? Are you also of the view that the positive undertone will only continue?
Absolutely. So that's the view. If we look at it, after a really long time, we've seen Indian markets outperform the global indices. So one of the things which I look out for is a ratio chart between Dow Jones, S&P 500 and Indian markets. This has finally broken out after 2008. Previously, this broke out was sometime in 2003-4, and we had a 2-3 year period of super outperformance. We may not get a similar size of a move, but outperformance is what it looks out for the next couple of years. So the view is we could continue to outperform. And on the other side, I have a view that continuing in their trend with selective moves, they may not be as great as it was last year, wherein everything moved up in the last 6 months, but it could get selective, but the trend remains positive. So overall, the view is we wait for more, say, a fresh breakout into new all-time high to confirm that, but the trend is extremely positive across the board.
Okay, trend is positive, and perhaps even this Samvat is going to bring us nothing but big smiles. So let's find out what stock ideas then our chartists are adopting in order to make the most of that strategy. Kunal?
So I'll suggest two buy calls. Sticking to the two names which I recommended a few days back. NMDC as the first stock, which I would suggest as a buy. Classical breakout for the stock price above 170 mark. So would look out for targets in the range of 180. Stop loss now could be tailed to 163. Aarti Industries, the other stock, has confirmed a breakout of 200 moving average as well as a major swing resistance. So would expect a much bigger target on the upside, raising the target to 580 for the stock and stop loss kept at 490.
All right, there you have it. Let's find out what's on Naresh's radar. Naresh, top recommendations this Monday morning.
So first is a buy on Sun Pharma. The stock is coming back to the prices last seen in 2015. And that would be a multi-year breakout, a 8-year high again. And the stock on the short term has broken out the highs of 1160, 1180, which was a resistance for the last few months. So looks like a fresh trend starting off in Sun Pharma. And we've seen all pharma stocks do well. Sun Pharma being one of the larger weights could be the next one. Expecting a move towards 1300, stop loss at 1140. Second is a buy on ONGC. The stock has given a multi-year breakout. The stock was at 190 to 210 back in 2017, 2018. And the stock added 195 last in Russia-Ukraine crisis when Brent crude hit $130. And the stock has finally crossed those levels. So it looks like a multi-year breakout and start of a trend which could be surprising on the upside, the same way which has happened with the rest of the PSC names. Short-term target price of 220, stop loss at 188.
Okay, and as we welcome Summer 2080, let's hear out some of the biggest market voices on their top themes this year, what they think the market USP is going to be.
We have been vocal about pharmaceuticals, that in the world, if over the next 5 or 10 years you're going to go more and more towards biology and CRISPR technologies, then the old chemistry-based bomb the illness and get rid of it. That's going to change. So the old stalwarts in IT and pharma, which led our export thrust, I think morph towards IT hardware with the EMS guys, automobiles, because we have shown we are competitive with the world. Two big sort of levers for India will be the materials stroke manufacturing space and financials. Like I said, is things like EMS, things like chemicals, this whole consumer tech space. So I'm not recommending the stock, but the Zomatos and others are in a duopoly, and it's for them to lose this game now.
In space, it is very easy to add supply. So market shares can change over time. So one has to be a little more alert, but the nature of the food delivery business is such that it is nicely consolidated. There is no third, fourth, fifth meaningful player. I think that is less likely also. So we should be reasonable in our expectations. So I think it's a very trend that will progress for a few decades, but progress will be slow and steady. India's power demand will grow at a fairly decent pace because adoption of ACs in India is only 5%, and as income levels grow, discretionary spends grow, air conditioning will consume a lot of power, manufacturing will consume a lot of power, economy is growing in any case. This electrification will consume significant amounts of power. See, the right to win in power sector is with companies that borrow at the cheapest rate.
Artificial intelligence in itself is not an investing opportunity, but the companies which are enabling themselves using artificial intelligence, getting their cost structure altered, getting the time significantly shortened. So there will be a lot of case studies, Nikunj, over the next 5-10 years of companies which will tremendously benefit security.
Okay.
Will be a very, very big business in times to come. We are already seeing, right, like, what is happening. AIMS Hospital, a small pharma company in Hyderabad having cyber attacks, right? These are things, and this is a $200 billion business worldwide called Wari. We made a significant investment 1 year back. I think this is an interesting company to watch. They are already bagged significant orders in the last 2-3 months, some panel prices. Hopefully I will not commit this mistake now, that if we get the theme right, just because the stock price goes up 3x or 4x or 2x, we are not going to sell it in a hurry. So pharma is a short-term theme. I would say, you ask me 10 years, 15 years. For pharma, I think next 2-3 years, specifically the mid-sized pharma company.
Talk about a specific company and this thing. But if you have a portfolio of financials, insurance, asset management, broking, your banks, and then you have other non-financials. I mean, so a portfolio will do very well. The booms have a huge trickle-down effect. You imagine one bridge or something gets built, or building like this builds. I mean, how many guys they get a job? How much of the materials are being consumed? So that is what is happening now. So as the boom picks up, I mean, this is just about COVID first recovery, and now we are seeing the companies doing better than pre-COVID level. It's just about the first year. I think we have a 10-year journey or 12-year journey. I don't know where it stops, but I see a very bright future for the economy driven by infrastructure and reality.
Your faith on the revival or the renaissance of manufacturing in India, thanks to many opportunities. Government has a big focus on Make in India and all the supportive policies that they have been putting right from. I think defense clearly stood out for us. We were pretty early in identifying that theme and has done very well. Some of these trends, formalization, digitalization, automation, financialization, all of these are very structural trends with tremendous opportunity over the next several years.
All right, Sanjiv Bhasin joins us live to talk about where he feels that things are headed, at least for this week. कैसी रही दिवाली संजीव साहब?
गुड मॉर्निंग निकुंज, आपको भी शुभकामनाएं। बहुत बढ़िया रही दिवाली, बाजार भी अच्छा है और माहौल भी अच्छा है। फॉर वंस दी AQI लेवल माने पटाखे बहुत कम बजे, लोगों में अवेयरनेस भी है। दो आई थिंक चिल्ड्रन आर डिप्राइव्ड ऑफ व्हाट वी वेंट थ्रू अ गुड टाइम, बट because of pollution, you know how much of hazard that is. However, I think there was more of lighting, and at least from the two shops which I went to, I thought they were chock-a-block. और वो छोटा जो किराना वाले बायर्स है ना छोटी चीजों के, वो कंजम्पशन बहुत स्ट्रांग है। तो I would give it a thumbs up that I think discretionary and some of the staple spending has picked up, but the bigger range remains that houses, construction, that activity I think is going to propel from here right up till the elections and beyond.
Is there a trade in the short term in any of the jewelry stocks, in any of the retail stocks, in any of the textile stocks, considering that just about everyone I've spoken to, they've said the following: long lines or very long lines and really very long lines were outside big stores.
Correct. So retail mein you are seeing that I think Reliance Retail will be the biggest beneficiary. They are adding about 800 units, 800 outlets per quarter. So I think that is one thing which is getting unnoticed by the market, how fast Reliance Retail is now expanding into the market share and gaining market share. Pehle they had about 2,000 outlets, now it's 800 per quarter. So you can imagine how fast this multiplicity will be, and that caters to all needs. Second, if you want to buy jewelry, most people will suggest smaller names, but stay with the brand leader Titan. There is no question with the, in North India or Delhi, at least there are weddings like, you cannot believe how many weddings there are in the next 2 months because saya bahut bhari hai. And I think Titan will be the best play on that. And thirdly, you said textiles, so you can buy a mix of stocks. Nahar Spinning and Monte Carlo are two stocks which we own from much lower levels. And we think they are very good play on the expanding market, both on the woolen wear and the other, cotton textile, which they are doing extremely well. So these are few names which I can suggest.
Hi, morning. And given that there's been a furious rally taking place within the entire PSU space, a lot of the defense sector stocks, a lot of the railway stocks have had a pretty powerful run. Do you think that there's more steam left in this space? And which stocks do you like?
So Avan, everyone is talking samvat to samvat. Someone is talking of large cap underperformance. The stars have been REC, PFC, NTPC and Coal India. And you kept doubting the rally and they kept going higher. So I think that there is still more steam there. I would not advocate that you just buy fresh ad hoc, but do a sip in some of these stocks. These are on a multi-year high, which means that there is so much of under participation, particularly from mutual funds and FIs, that these are going to be huge outperformers. You can add a Tata Power, which I think will be the best power play on the private side, but don't miss this basket of REC, PFC, NTPC, and Coal India, and add an NMDC. I think if you bought these 5 stocks as a SIP, you will be richly rewarded for the next 6 months. But also add a Tata Power in that basket.
That's interesting, some of those top recommendations. But let's also get in a sense, Kunal, from you, because I think yesterday you spoke about Coal India as one of your top picks. It was a top Nifty gainer yesterday at 331. Where did the stock head?
Yeah, it looks interesting. And, typically I've realized this, that whenever a stock changes its beta nature, that's a sign where we see new trends emerging for the stock. Coal India erstwhile has been a very laggard kind of a stock. It used to underperform in major part of the market trends. But you look at the change of prospect for Coal India over the last, I think 2-3 months. August lows, the stock was almost at 220 odd mark, 220, 225. From there on, in just a matter of I think 3 or 5 trading sessions, the stock moved from 225 to 280. So that was a good 60-point rally for Coal India. And from there on, the stock has not looked back. It's actually gained good momentum. The stock is making a pattern of higher highs and higher lows. So on the short term, over the last 3 months of medium term charts, it looks very interesting. The stock has broken past about a major downward sloping trend line, which has been going on since the last, I think, 2-3 years for the stock price. So would be very bullish on Coal India, and look out for higher targets on the upside. And looking at the beta nature, we would probably gain, look out for targets at least in the range of 360 to 380, and then keep on revising it on the way upwards.
It's been a steady quarter as well. The company has delivered a 12.5% growth in their net profit, 6,813 crore rupees. The EBITDA as well has expanded this time around. So it's been a pretty solid set of numbers. Other numbers then, I just want to flag off some of the stocks that we'll be watching out for. This came out post-market as Friday, but SAIL will be on the radar as well. A profit this time around of about 1,300 crores versus last year's loss. The revenues as well grew. You saw that reaction yesterday, of course, play out in the Mahurat trading session. Something like a Biocon will also be on our radar, but flat in terms of its revenues at 3,462 crore rupees. So those are some of the other stocks that we'll be tracking, but we've been speaking to a lot of top market experts, and there's merit in investing in the small caps for the longer term despite high volatility. That's the word from Sunil Singhania, the founder of Abacus Asset Manager. Let's listen in.
One thing which you have to remember is that we are a growing economy, and we are an economy which is evolving. So we have many more sectors, many more companies which are coming up for listing, and which are also growing faster. The other thing is these are entrepreneur-driven companies, So I think in a growing environment, these companies will tend to grow a little bit faster than the larger companies and the overall economy. And I think that is the reason why they tend to do much better. Yes, sporadically, there are companies which go into a over-exuberance kind of a zone. And from time to time, there is a correction which happens. It happened in 2017-18. It happened briefly in between also during Corona also when the market fell. Maybe these stocks fell more. But I think given the earnings trajectory and the fact that the earnings for these companies tend to grow slightly better or faster than the larger companies, I think there is merit in saying that for really long-term investors, who have a view of 3-5 years, these companies can give you better results, but with more volatility. But from an investor's perspective, I think to have a diversified portfolio is better because there might be phases of 2, 3, 6 months where some of the larger companies do well. And the other thing is that, typically the domestic inflows, when they happen, I think the smaller companies or the broader markets do well, which has been the case last 2-3 years. If and when the foreign flows start to become positive, it is possible that large caps during that period might end up doing better. But I think we are constructive on the overall market, be it the large cap, mid cap or small cap.
So in terms of in portfolio positioning, Sunil, the template which you followed is 15-15-15. 15% growth, 15% return ratio, and P of less than 15. So that 15-15-15 model, is it still at play in this kind of a market where nothing is available at 15?
No, it is difficult, but not impossible. And Nikunj, it is basically a visible sort of thing. So what we say is out of these three, 2 should be present and 1 should be visible. So, a 15% sacrosanct ROC and ROE is something which allows us to ensure that we make less mistakes. A 15% growth is possible across so many companies. And if you are able to dig a little bit deep and take 3-4 years view, you are able to find stocks where even the valuations are in your favor. So it's not to say that every stock which we buy will have this, but at the portfolio level, we are still able to construct a portfolio where these are met. In fact, both our portfolio strategies, one is a all cap, which is a mix of large and mid cap, as well as the second, which is purely mid and small cap, even now have all these three present at the portfolio level.
Good evening. It's been quite a year. There have been a number of headlines that have dominated, very unfortunate incidents that have taken place across the globe. There's been a lot as well that we've spoken about when it comes to central bank action. What do you think is going to be the big headline, the big talking point? Do you think elections are going to be a dominant factor on the minds of investors while looking at the overall market?
No, obviously, it's a big event. It happens once in 5 years. So you have the state elections, which have already started. So the results should be out first week of December. I think those results are more or less known in the sense that, almost everyone predicts a close election. So I don't think the outcome of those elections is going to be anything dramatic unless there are big surprises. And in the 24 elections, I think markets are more or less factoring in a continuity. And there is no reason to believe that should not happen, at least as far as the trends which are visible at this point of time. But one thing we should not forget is that this government has been in power for like 9 years and change. First 5 years went into a lot of stuff which needed to be done, which was cleaning the NPAs out of the banks. You had demon experimentation, you had GST and so on and so forth. The second 4 years and change which we have seen so far, half of it went into COVID. It's only in the last 2-3 years we have started to see the full force of economic push, so whether it is a 10 lakh crore spending on infrastructure, the PLI, the Make in India, defense, railways and so on and so forth. Our view is that the next 5 years can be really revolutionary, and that would be the phase where India from a $3.7 trillion economy can easily cross like $5.5 trillion economy, and that phase will be very exciting, and I think investors should look at that big picture. And definitely, to answer your question, it's going to be a big headline.
Every time just before the beginning of the new year, Sunil Singhania gives his best Murat idea. And you cannot say India, you cannot say Abacus mutual funds. You have to be slightly more specific. It's Diwali time.
I think, Nikunj, I don't think I can give you stock ideas, but what I can tell you is that, you mentioned whether we'll have smiles next Diwali or not. I think last 20-25 years, whoever has been positive on India has had good health and created good wealth.
Let's look at some mid-cap names which have done rather well for themselves. I would say actually not mid-cap, but two-digit names. Sanjiv, one is Vodafone. Second one is JP Associates. Vodafone we've discussed again and again with you, but what is the reason why a business like JP Associates has made a comeback? I mean, in Suzlon for that matter, it was almost like on the backbench. Nobody thought Suzlon could make this kind of a comeback, both in terms of business or in terms of perception. 3 rupee stock has become a 40 rupee stock.
So, Nikunj, I'll give you some disclosures. We have this in our portfolio, and as a disclosure, I have it in my portfolio. I've been advocating from 8-9 rupees, which was very frustrating for most. The simple reason for JP is that out of that 27,000 crore debt which they talk of, almost 23,000 is on an SPV, which is again going on in the NCLT. ICICI has actually said that they should be out of NCLT because a large part of their businesses, particularly their civil contraction and others, are doing extremely well. They are into hotel, they are into hospitality. They still have a 5 million ton capacity on the cement side, clinker, which is under sale. And if you took some parts of all their businesses, then the value of the asset will be far greater than what the market cap even now after doubling is. And that was what the reasoning behind it was. Secondly, they've got a lot of relief in the shape that large part of the NCLT is now, there's been an absence of an Allahabad court judge for the last 2 years. So you can imagine how long this has been prolonged. And like I said, the value rise in the eyes of the beholder, but you have to go through the pain. Vodafone, simply put, is two things: 42.5% EBITDA on a turnover of around 10,700. Now there is hardly any loss of subscriber base. 5G's penetration is already started in about 5 cities. 3, the infusion of capital will actually reinforce confidence in the lenders. Fourth, 33% is owned by Government of India. They have not defaulted on any bank loan as such, but the perception has always been bad. I think that ARPU is at 142 and rising, and given that there is going to be capital infusion, will again reinforce confidence. I would think this can set the pace for this stock to be a huge outperformer on the back that business is very good. But the problem has been capital, the problem has been a slight bit of perception, and that all is, on the anvil of seeing a huge change.
Stocks which are going to be in focus. Eicher Motors came out with its numbers. Those numbers definitely are above estimates. So that's going to be one stock to look out for. Sun TV, with the kind of gain that stock has had year to date, this has really been one of the high flyers amidst the media pack. Year to date is the quantum that one should actually bring out. So this year alone, it's seen a gain of about nearly 34% Fortis has come out with its numbers, wherein the hospital business revenue has seen an uptick of about almost 12%. The occupancy levels as well have risen on a sequential basis. So that's going to be another stock to look out for. And then, of course, Coal India, the high flyer that it has been. The Q2 numbers have been above estimates. Realization compression is lower than expected. So this is going to be one stock to look out for sure. This year alone, it's seen a gain of over 47%. And Kunal, if I recall, this was one of your Diwali picks as well.
Well, yes, it was, and I think the stock seems to have come out of major consolidation. Last, I think, many years, Coal India was acting as a drag for itself, but we've now seen a refreshing change of trend for the stock price. I've always believed that whenever stock changes its beta nature, it starts off into or it kickstarts a new trend for itself, and we've seen that happening for Coal India. The stock breaking out from 220 to 218 in just a matter of, I think, 4 or 5 days, started the month of September, and I think post that it's not looked back. So it looks very attractive. I think even at current levels, I would probably look out for steady targets of 360, 380 for Coal India over the near term. And then as and all the stock scales up higher, we could probably revise the targets upside.
ONGC, Coal India, NTPC. What is the common theme? Well, government. Second, natural resource, power, and largely it was something to do with commodities, let me put it this way. Now, Sanjiv, given that we are looking at a decline in crude, we are looking at drop in demand, we are looking at China slowing down, and US has also hit a peak growth according to all economists. If the underlying template for commodities is weak, then why should Coal India and ONGC do well?
Yeah, so you should, half the credit goes to Putin and the Russia-Ukraine crisis, which actually put the whole scenario, changed the whole scenario of thermal power. And where people had written off Coal India at 90, that thermal will no longer be in existence and so on. All those soothsayers are, have been caught on the wrong foot. I think that power is in a very, very strong space. Recoveries, receivables, transmission, and thermal power in India is a no-brainer. So you are aware of how this whole Russian crisis actually escalated and told you that the demand for coal is going to be huge. Now, in this backdrop, you can understand that ONGC was a value play even at 90 and even at 150. And despite crude prices being volatile, look at the numbers. Third is again NTPC, where again, like I said, a fixed rate of return. Now recovery is on the fastest, and this transmission has been the best play in India in the last 2 years. And kudos to Minister R.K. Singh and the policies, because REC, PFC's cost of money and their performance is actually belying expectations how well they could be. Secondly, Nikunj, what has happened is that basket of PSUs, the large caps are always ONGC, NTPC because of being their heavyweights, and for foreigners to buy and sell, that becomes a easier conduit, even though the valuations look stretched. So I think that basket of PSUs, again, with power being the outstander and Hindustan Aeronautics and BL being the next in line, this is a very, very sweet spot to be in. Like you said, if global growth is down, then you have the OMCs, which have made a very strong comeback. 88, 89, IOC is 100, BPCL and HPCL are hitting almost 52-week highs. So I think the undervaluation of PSUs and the large cap ones particularly is seeing a lot of attention and a lot of participation.
Sanjiv, always have a pleasure to have you on the show. We'll let you go on that note. Thanks for joining in. Okay, let's move on. And since we were on the subject of PSUs, the stellar rally clearly can't be ignored, but can it continue in the year to come as well? Here are what market experts are saying.
So I think power, what has happened, one, India's power demand will grow at a fairly decent pace, because adoption of ACs in India is only 5%, and as income levels grow, discretionary spends grow, air conditioning will consume lot of power, manufacturing will consume lot of power, economy is growing in any case. This electrification will consume significant amounts of power. So I think this is what I have been saying all along, that this sector was misunderstood. And see, the right to win in power sector is with companies that borrow at the cheapest rate. If there are 3 companies and all put up solar plants or all put up wind plants, the cost of panel, the land, everything is practically the same. The difference can come from cost of borrowing, because these are projects that are typically 70-80% funded through debt. So someone who borrows half, 1 or 2% cheaper is likely to be a winner. The ROEs will be higher.
I think there's significant appreciation which has happened. I wouldn't basket it saying that it is all over. There will be individual companies. Maybe the pace of growth, pace of returns will be definitely not as good as it has happened in the. Let me give you some data. In the entire PSU basket, 3 years back, market cap was 14 lakh crores. 3 years later, the entire basket is 45 lakh crores. But there are individual companies within this basket. Of course, they have given like 500, 800, 1000%, 1500%, 200, 2000% returns, right? So I think, to say that the entire rally, and this is clearly the leader of this market. PSUs are clearly the leader of the market. I still feel that, PSU banks are quite compelling. They are still trading at, 4-5 times PE, less than 1 time book value, if I have a 2-year perspective. How can they peak out when the earning cycle is still so strong?
See, some of the businesses are very good. Some of the companies are also very uniquely positioned, monopolistic condition. They have asset light. They have unique, IPRs with them, and government cannot do without them. And in that side, there's a lot of build-up like defense and all. I think there is a long-term trend to allocate more for this thing, build up defense. And these defense companies are monopolistic, though they are public sector. So there is a little bit of challenge in terms of, but the well-run public sector is monopolistic, high return on capital and all. And their dividend policy is better than private sector. So I think you have an opportunity there. But now they are no more like 2 years back, the kind of valuation you had. वहाँ से काफ़ी ये होगा. So you have to be a little more careful which ones you are doing, where is the action. So you have to understand company wise.
Rahul Shah also joins us. Rahul, good morning. Thank you for joining us. Joining us from office or घर से?
Hi, good morning. Joining from the home.
So no office today.
I'm jealous. I think festive mode.
We are at office. We are at office.
The festive mode, we were there for the Murat trading yesterday. And
we were also there.
Just spending time with the family.
Just tell you who works for an income and who has wealth.
Exactly.
The ones who are working from home, they've already reached.
We went home late and we came back early.
Yeah.
Okay.
Though can't say the same about Kunal, but yeah.
Kunal is just being generous. Thank you, Kunal. Thank you for being
Kunal
so
really
nice
likes
and going
us.
out.
That's why
he's just gone out of the way. He's just gone out of the way. It is not compulsion. It is just his. This is just his approach, which I appreciate. Thank you, Kunal. Nuresh, जो कल भी नहीं आया था. मैं क्या बोलूँ? So Rahul, what did you make your clients buy yesterday? Traditionally, we always have this buzz when you speak to people on Murat Day, and it is like this whisper thing. Murat ka trade kya hai? What was the Murat idea yesterday?
So I think one idea was very clear. I think we discussed also just a few minutes back was PSU Bank. So I think in that PSU Bank, I think we've been talking that for last 1 year or so, and I think the earnings is quite visible in that sector. And I think most important, they've been more resilient also in spite of we saw some sell-off in the private banks and financials. If you look at index, Bank Nifty is down, say maybe 8% from the peak, and still I think they're just holding on to the most of the PSU banks. So I think except for large cap SBI, I think rest all mid-sized banks have done quite well. So I think this is the time for PSU banks, which will continue to do well next 1 year or so. So right now the sector is trading, I think, 20% premium to the long-term averages, but I think this will keep on getting re-rated. So I think what we saw in last 10, 12 years in PSU banks, we know all the problems in the banks, and now that this scenario is different. So I think if you look at this quarter numbers as well, and not only this quarter, but if you look at the previous quarter numbers, the numbers are bang on. So I feel that all your PSU banks, second launch, starting from Canada, Bank of India, Punjab National Bank, names like Jammu and Kashmir Bank. So all these banks will do very, very well. So I think they've already done well. And then if we look at in terms of 52-week high, and you might say, think about it, yeah, pehle se chal chuke hain. But I think there's still a lot of steam left. So I think in a lot of places, I think in next year and a half, I think there could be a chance of a doubler from here as well. So we've seen few of them already been doubled or maybe more than that. But I think still there's a lot of space in the PSU banking universe. So I think that's the trade for the next 1 year. That is what it looks like.
That's the take coming in on PSUs. Let's just mark what some of the active movers today are going to be. And, you know, we've been marking all the earnings. You've got... of course, numbers coming in from Coal India, which came by over the weekend, Eicher Motors, Sun TV, SAIL. All these numbers were ahead of street estimates. Fortis as well. You had a Munjal Auto as well, wherein the margins have expanded all the way now, touching 14% as opposed to a comparable of about 12% odd. Power Mech as well came out with its numbers. Yes Bank is in the news as well this morning. They've got a 120 crore rupee settlement from a single trust and security receipts portfolio. So look out for that. Having said that, the market has its fair share of disappointments as well. ONGC, the Q2 numbers are below estimates. The windfall tax impacted realizations by about almost $11 per barrel. Glenmark as well, they've reported a loss versus a profit. Exceptional loss, of course, being higher by about almost 68 odd crore rupees. There's Biocon, wherein the Q2 numbers are below estimates. Tata Chemicals, the EBITDA is down about 11%. So all these are going to be stocks which are going to be in focus this morning. And even LIC, wherein the first half value of new business is down 10%. The APE has slipped nearly about 10.5% on a year-on-year basis. So all these are going to be stocks to look out for. RCF as well, disappointing set of numbers coming in there. Alcargo as well, similar story. The numbers are weak. The EBITDA is down 68%. Margins at 3.6% is a serious shrinkage from what they reported in the same quarter last year. That of roughly about 7.5 odd percent. So these are going to be a bunch of stocks to look out for. And I think LIC, Nikunj, has got to be the biggest sour story of summer 2079.
You know, both in terms of market response and also in terms of growth, they are just losing market share. While, you know, you can endlessly talk about, you know, it's a cheap stock, it's a stock where eventually business will come back, they still have a great brand, so to speak. But in terms of a PSU getting re-rated and LIC not doing anything, they are doing some measures where they are creating value. But it's a business which a market finds it very complicated. B, it's a business where you know that they do have a first mover advantage, but that first mover advantage is getting challenged. And then it's been a year where, you know, insurance in general has done nothing well, nothing at all. Whether it is HDFC Life or whether it is ICICI Lombard. This year, look at HDFC Life, like a 10% move, that's very flat. SBI Life 10% move. Star Health plus minus here or there. ICICI Prudential may be an exception largely because they get a lot of business from ULIP, but Star Health flat year with no return. Rahul, you go to hospital, they say we are getting a lot of income because India is buying more health insurance. But I look at health insurance, they are not reporting good set of numbers. So if Indians are buying more health insurance, where is the business going?
So I think two, three things for it. I think one is obviously, I think the numbers has been weak for, as you rightly pointed out, and I think nothing so great in terms of the number for if you look at the listed entities like ICICI or maybe like Star Health. The numbers have been pretty okay kind of a stuff, and does not look like that in near term anything is going to happen in this sector. Only thing is, I think where we look at it, I think there will be the numbers could come better in maybe a story for next 4 or 5 years to own it, and very few companies on a listed space are available on this sector to hold in for it. So I think the size of opportunity is huge, but I think near term, I think as you rightly pointed out, does not look like that any of these stocks will do well.
Let's also listen in then to Nilesh Shah of Envision. He joined us in our studios on the auspicious Muhurat trading session and flagged off a lot of stock ideas and long-term themes. Let's revisit some of those stocks.
Is there a bubble? I don't think there's a bubble there. And that's purely because the earnings growth differential still is significantly higher in mid and small caps versus the large caps. Even if we just take the poster boy sector called banking, even for the foreseeable future, the smaller banks, the mid-sized banks will still grow at a faster pace versus the large banks unless we have challenges of asset quality. When do challenges of asset quality happen? When the economy gets into a downturn. We've hardly started. We have a long way to go in terms of the economy. The bankers are still cautious. The bankers are still trying to be rational. So I clearly believe that the mid and the small cap will continue to show better growth. The mid and small caps have certain advantages coming in from the GST reform, the technology adoption, the access to markets, the consumer market. These are some of the advantages that they have got over the last 2, 3, 4 years, which I think has pretty much created a level playing field. So yes, mid and small caps have outperformed, but are they in a bubble zone? I don't think they're in a bubble zone.
Nilesh, last Diwali when we had you in our studios, I remember it was all about khana pina. It was all around, consumption. From there, there's been a tectonic shift. It's all about manufacturing now across the spectrum. Do you stay put in the consumption names, add to manufacturing, or you think manufacturing is that one space where you got to be in?
I believe both are very long-term plays.
Okay.
The khana pina will continue.
Of course.
And it is only going to get...
It doesn't look like you eat at all, but yeah, anyway.
But it will continue, and it will continue for many, many years. Even on Friday, when we had earnings coming in from a couple of the khana pina segment, the smaller companies, just look at it. Earnings beat, and there's nothing which is stopping them. And I clearly believe this is something which will keep happening for the next 5-10 years for the long term. Manufacturing is extremely interesting. And that's again something which is going to be, keep probably growing again for the long term. But I think clearly for the next 1 year, it's going to be the len-den sector, which is the banking sector, the investment sector, the financial sector, which probably took a bit of a backseat last year. But my view is that it will probably come back with a vengeance in the coming year.
But there's a lot of churn out there, right? HDFC Bank has done nothing, Kotak has done nothing. There have been a few odd big stars like an IDFC First, for instance, or for that matter, what an ICICI Bank, Axis, etc. have done. Will the churn continue? And would you have to pick out your winners within banks, or do you think it's going to be across the board, everything is going to rise in the tide kind of a situation?
My view is it's going to be across the board. Okay. And why do I say this? It's because number one is I think once the uncertainty or the event of 2024 election is out of the way, you're going to see very large allocations coming in from foreign portfolio investors. Clearly, banking and financials is a favorite of the FPIs. And when that happens, I think a gush of liquidity is coming where they can deploy on an overnight basis billions of dollars to work. That's number one. Second is I have a bit of a contrarian view on the macros, which is that currently we're all concerned about inflation and interest rates. The single indicator is that crude oil, despite the challenges in West Asia, despite what's happening with Iran and Palestine, crude is not able to cross even $90. Okay, and so my view is that it's quite possible we could see a softer crude oil environment over the next 12 months, because of which inflation could probably kind of ease. Interest rates probably have peaked. Higher for longer might be there, but it's quite possible it plateaus. If that happens, the concerns around NIMs for banks might just kind of come down. The kind of concerns that we've been hearing over the last couple of quarters, that higher rates for FDs, therefore lower NIMs and therefore pressure on profitability, that concern may not play out, and it may actually be a kind of a Cinderella situation for the banking sector. So I clearly believe banks and financials could be clearly a big sector for the year ahead.
PSBs included?
Across the board. I think across the board it's going to be, but I probably think that the private sector banks which have been languishing, the big private sector banks, they might just come back with strongly. I mean, they have not given returns for 3 years.
Yeah.
Okay.
Yeah.
I would be surprised if this would extend into the 4th year as well.
Right. Rahul, what is that one sector that you're betting on for the Samvat ahead?
We've been liking, I think I discussed some of the public sector banks. So I feel that public sector banks still will make a very good comeback. From here, we'll get a re-rated, and I think where the numbers have been in this quarter and they continue to do well. So I think this as a sector, starting from Punjab National Bank or Bank of India or like some Jammu Kashmir Bank and Canada, all available at very, very reasonable valuations. And I think under-owned by the investors, especially from the foreign institution side, if we look at from all these banks. So I think there could be, whenever we see that the flow from the FIs coming back, I think this is the sector which will continue to do well and will be hitting more new highs from the current levels.
Fair enough. Those are some of the top recommendations. But in light of the fact that you also had Eicher Motors come out with their quarterly numbers, you've had the auto sales go by. And like Nikunj was saying, it's really going to be the proof in the pudding in terms of what the festive cheer has really brought for some of these auto majors. Rahul, where is it that you're looking for opportunity within the entire auto space or even auto ancillaries for that matter?
So I think I'm more positive on play on the rural economy theme, and I think Mahindra and Mahindra remains the top sector bets in the entire auto space. And I think we saw the results coming up last weekend. The results were slightly below what the street was estimating, but if we look at it, this is the one play where at 65% of the revenue comes from the rural place. So if somebody has to play a rural theme, then this is one of it. I think ahead of where we have seen the launches in the SUV space, and I think the numbers have been quite good with the stable RM cost. And thirdly, I think most important, the new launches of EVs, which will add value to them. So I think Mahindra and Mahindra, and if we look at the valuation perspective, it's still not expensive vis-a-vis the sector. And then if we look at the value, after a long time, Mahindra and Mahindra started trading to premium to its last 3-4 years. If we look at it, which used to earlier trade at a discount of last 10-12 years of Mahindra and Mahindra. So I think risk versus rewarded, I think 15 times earning, I think there's nothing to be lost from here. So I think if I have to bet on the entire auto, I think like Mahindra will remain my top bets in the sector.
Great to have you on the show. Thanks as always for taking the time out and joining in today, and wish you a very happy Diwali from all of us once again. Let's now welcome on board Satish Pai, MD at Hindalco Industries, and talk about their numbers. Satish, hi, good morning. Good to have you on the show. It's been a rather good quarterly numbers for you, especially for Novelis, with EBITDA per ton now at $519 in the second quarter. Novelis' EBITDA per ton crossed about $500 per ton mark, much before your earlier guided timeline as well of Q4. Can we say that the worst is behind us for Novelis and that second half is going to be relatively very strong?
What we said has happened, because we said that the can destocking would finish largely in Q1, and in Q2 the can volumes will come back. So if you see, the shipments are up 6%, but the can shipments are up 12% in Q2. So steadily the destocking getting over, can demand coming back. I think in the second half of the year, you're going to see what we said. By Q4, Novelis will be at $525 per ton. And that was what we had predicted.
So how is the demand shaping across segments for Novelis? Are global macro concerns hurting demand and sentiment at all? And can you walk us through how demand is shaping up in each of your segments?
So it's a mixed bag. So let's go one by one. So can demand had gone down because a lot of inventories had been built up. That destocking is over. So can has now started its growth path. Auto has been very strong. We have had double-digit growth in auto, largely driven by electric vehicles. So that has continued. Aerospace demand has been extremely strong and is going to continue. The building and construction sector, especially in the US, and the specialty sector has seen softness in demand because as interest rates have gone up, building and construction activity had come down. So that sector has seen a little bit of a lower demand, but we are starting to see stabilization now because interest rates have sort of, people think, have gone to as high as they can get, and it's going to be flat to down from this point onwards.
Right, Mr. Pai, what about the geography-wise performance? How has that been? Do you think that the soft demand from Europe will be a concern? And tell us about how the US markets have fared.
So US has been, if you look at the quarterly results that we put for Novelis, US results have been extremely strong. South America, Brazil is picking back up. Europe continues to be flattish. And actually, Asia is a little bit down because the Asian economies are not doing that well, and can demand in Asia is a little bit weak. So actually our weakest region right now has been Asia. By the way, India is extremely strong. Aluminium demand has grown by over 10%, copper has grown by 7%, so India is very strong.
Right. Mr. Pai, do you expect aluminum prices to be in the $2,100 to $2,300 per ton range for the rest of the year? Is that a fair assumption?
Yeah, I maintain that 2,100 to 2,300. I mean, today it's about 2,220. So I think that until macroeconomic uncertainties go away, most commodity prices and aluminium prices will remain range bound in the current range.
Right. And, you know, last time when we spoke with you, you said that you expect coal costs to decline nearly about 3% in the second quarter. You know, they have indeed come down, but now for second half, have coal prices started inching higher? Where do you expect the margins to shape up then in lieu of that?
So, you know, as you said, in Q2, coal prices came down nearly 15% from Q1 levels. But in the current, you know, power demand in India has gone up again. Spot auction premiums have started to rise. So in Q3, we are guiding that coal prices may go up, but some of our other input costs, furnace oil, caustic, are actually still going down. So we are guiding that in Q3, the cost of production could be flat with Q2.
Now you have time and again reiterated the most part of Hindalco's expansion will be organic and that you don't see any inorganic opportunity. Would you maintain that?
Yeah, I think we have made some pretty large capex bets. So we have this large greenfield project in Bay Minette, Alabama, 2.7 billion greenfield rolling mill, which is now sort of, you know, 30-35% in the implementation stage and is on track. So that's a large capex and a large bet. It will add 600 KT to the 4.2 million tons capacity that Novelis had. So that's our single largest bet. And if you look at India, we have the expansion going on in Odisha and Sambalpur for 170 KT. It's a 3,500 crore project, which is on track. And we recently announced a 2 million alumina refinery also in Odisha, with nearly an 8,000 crore outlay. So we have fairly large capexes that are in the play, both in India and in Novelis internationally.
All right, thank you so much for taking time out and joining in, giving us a view on how the quarter gone by has shaped up. All right, let's get a move on. Lots of other top stories and headlines to track. Well, across the world, it's more than a month and the war between Israel and Hamas continues to rage on with over 11,000 casualties. The World Health Organization has said that Gaza's prime hospital is no longer functioning, has gone out of service now. Israel claims that Hamas has its base underneath the building. However, Hamas has denied those allegations. Now, this comes as Israel forces continue to pound in the heart of Gaza City amid no ceasefire. Back home, in 24 hours after the under-construction tunnel collapsed in Uttarakhand, at least 40 workers are still trapped. Immediate response teams, including the National and State Disaster Response Fund, as well as police personnel, they've been mobilized to the site. Rescue operations are currently actively underway.
And the box office money-minting Marvel machine saw a speed bump with its new release. The latest entrant in the Marvel Cinematic Universe hauled in an estimated $47 million domestically over its debut weekend, the lowest in 30-plus film franchise's history. It must be noted that the Marvel is the 33rd installment in the MCU. And yet another victory for Team India, their 9th in a row in Bangalore as India blew away Netherlands by a massive 160 runs in their final group game. Centuries by Shreyas Iyer, KL Rahul powered India to 410 for 4 batting first. Netherlands in response could only manage 250. India will now face New Zealand in the first semi-final here in Mumbai on Wednesday.
All right, let's get a move on then and find out what the khabar is on D Street. Lumax Industries, that's going to be in focus. They've got some expansion plans on in their Chakan plant. Let's find out when it's expected to be operational and what are the synergies to the business. We've got Sharad here with the lowdown. Sharad?
Well, yes, in focus we are having Lumax Industries, and the buzz is that the planning has started for the second phase of expansion in the Chakan plant. Already from the 1st November itself, the first phase has started and they have commenced the commercial productions as well, and new orders also have been received from M&M as well as Tata Motors. Now, it's expected that an incremental revenue of roughly 170 to 190 crores is expected in the second half of FY24 as well, and the plant is expected to go into the full capacity in the phase 1 itself by March next year. That's what the expectations is coming from the street as well as the channel checks. Now, overall the revenue from this project is expected to come in at roughly 800 to 900 crore, but this is coming from the management commentary by FY27 itself, and the phase 1, if you look at it, roughly 5 lakh units would be under the production, and the overall EBITDA on a consolidated basis is expected to kick in at roughly 15%.
Okay, we'll leave it at that. Lumax Industries in focus. Time to turn to mid-caps, given that just yesterday you had the small cap index as well, making a fresh high for itself in the Mahurad trading. Kunal, any mid or small cap strategies?
Yeah, mid-cap name, and I'll go for a high beta space over here. So Wockhardt Pharma is something which I would recommend as a buy. The stock yesterday came back towards a flag pattern breakout, more visible clearly on the weekly as well as on the monthly charts. So would look out for targets of 280, stop loss to be kept at 240.
All right. Naresh, what's on your list?
So that would be a buy on City Union Bank. The stock has been sideways for the last 3 years. Pre-COVID, the stock used to be 240 odd. In between in 2020 also recovered to 200 a couple of times. On the lower end, multiple bottoms around 120. Last 6 months range has been 120 to 144, 140, 144. Finally, a breakout in place. So looks like a trend change out here going forward. Stop loss at 138, target price of 160.
Those are some of your top mid-cap recommendations. But while it was a steady year for the large caps in Samvat 2079, it was actually the small cap space which saw plenty of action. So what's the next Samvat holding in store for the small caps? Will it be a case of boom or bust? Let's find out from some of the biggest market voices.
Right now the prices are slightly elevated, as are our emotions, but it's also justified. So if things do work out in the coming election and no accident happens in the world geopolitically, I think it's a decade of very, very strong growth ahead for us. The over-exuberance I find is really in the small cap SME exchange. There's something crazy going on there, and I think it's some accident waiting to happen. The small caps have gone up, but it's not large enough to damage sentiment for the whole market. Because normally you used to see some very, very large player or very large company blowing up. And that leverage leading to trouble. You don't really see signs of that.
Across small and mid caps, I don't see any value. And I mean, if you look at 100 companies, maybe 2 or 5 will appear to be reasonably valued. I would say 90-95 of them, even the good companies, are not offering value. So I think the long-term outcomes of investing in this space, I think will be mediocre at best.
Markets are already going through that time correction in a broader market, not in the small and mid cap, but in the broader market. We spoke, Nifty has not given 5% return, and we are in the midst of a big bull market, right? So there will be a time correction. I don't expect that any 30, 40, 50% of correction, unless there is some black swan event, there is big political instability in 2024 election, or something globally really goes wrong, world war kind of thing, both that is impossible to predict.
Last 6 months, 1 year is mind-blowing. I mean, like index has done 8%, mid and smaller than 20%. So that excitement brings all the crowd into following. In fact, after 20% return, you should run from there and go to the large cap, because large cap is going to do that next 20%. Now mid cap and small cap had their breathing up. Now they have to breathe down. Large cap had done their breathing down. They have to breathe up.
Clearly, the mid and small cap funds have done extraordinarily well in last 3 months, 6 months, 12 months, but that should not be extrapolated. Our mid and small cap funds may have delivered 25-30% over the last few months, but you cannot expect 25-30% every year. You have to look at the long-term track record. As of now, purely from a valuation perspectives, large caps clearly look better than the mid and small cap at the index level. But of course, as I mentioned earlier, the trick is in the stock picking.
Okay, let's move on. While we count down to the market open and the pre-open rates are indicating a bit of a quiet start for us, let's tell you what the index strategies are from our experts, and a consensus there from both Kunal Bothra as well as Naresh Mirani, both recommending a hold this morning. What about the Nifty bank call as well? Let's bring that up as well for you, and it's a unanimous hold there as well. So the Moodometer indicating a hold for the Nifty bank this morning.
All right, it's going to be SGX was telling us a very different story. So Kunal, what's the trade for the week? I mean, are we playing for the breakout trade now in the Nifty?
Not very soon. I would probably believe that it could be at least another couple of weeks away, because the large cap stocks are still not firing up. Yesterday you saw, for example, even though in the curtail session, you saw a mild bit of recovery in stocks like Reliance, etc. But they are nowhere close to the kind of a breakout which we require for them to start firing up on all cylinders, or at least going through a cohesive kind of a move. Even in the banking names, you've seen IndusInd Bank actually being one of the top performers. ICICI Bank is trying to make a catch-up of sorts, but then all of the other names, the likes of HDFC Bank, Kotak Bank, etc., all of these stocks are struggling. So I think that kind of a strong large cap move as well as the index move is some time away.
Okay. Naresh, 20 seconds, are we in for a breakout trade this week?
Not really. Expecting a lackluster move even today and maybe up till Wednesday, Thursday. Then we'll maybe look at a trade.
All right, 7 seconds to go. Well, the new Samvat year has started. Yesterday was a good handover, and today it could be a flat day of trade. I expect volumes not to be unusually high today, even though it's the first day, largely because of it's Monday morning and then tomorrow's a holiday. So breadth also even Steven. Even though globally, everybody was talking about the Moody's impact, but that is just not getting captured right now. The breadth is literally all over the place. I guess whatever we gained yesterday, markets may just lose it today, and things may equalize when it comes to yesterday's, that Murat session. The green on the screen, well, crude interplays, so it could be BPCL, HPCL, and it really could be Interglobe Aviation. No, not too many newsmakers, with the exception of iShare, Biocon, Hindalco, some prominent numbers were there. The breadth is very lukewarm. The market volumes are not great. The small cap index is down. So it's almost like whatever we saw yesterday in terms of excitement, in terms of the uptick, that is just getting completely diminished, or it is just getting completely normalized. So that extra Sunday of 2 hours of Murat trading, whatever market gained, I think they're simply losing everything.
Yeah, we've seemed to have erased all the Muhurat trading gains. Let's just revisit what some of the earnings reactions have been like. Coal India, of course, was a very strong performance, came by over the weekend. The Q2 numbers are above estimates. Realization compression as well, lower than expected. You had Sun TV as well, which was quite the dhamaka. The revenue uptick of 27%. Margins have now bloated all the way to 69.5%, almost a 0.5% uptick on Sun TV as well. Sale 2, the adjusted margins though are below estimates, but the volume growth has come in at 13%. So that's another story to look out for. Eicher Motors as well, the Q2 numbers above estimates. EBITDA has risen 32%, margin expansion of 200 basis points. There's Fortis as well, which came out with their numbers. Occupancy levels have risen on a sequential basis. There's Munjal Auto, the EBITDA has jumped up about 39.5%. And then, of course, there's Yes Bank as well, not an earnings reaction, but they've got a 120 crore rupee amount from single trust in a security receipts portfolio. So look out for that as well. The earnings season has sure brought in its share of disappointments as well. So ONGC, wherein the Q2 numbers were below estimates, the windfall tax impacted realizations by $11 per barrel. That stock starts off lower by about 7/10. There's Glenmark as well, which has incurred a reported loss, and the exceptional loss stands at about almost touching 68 crore rupees. Glenmark down 2% this morning. Biocon also, the numbers are below estimates. Margins though have come in at 21.4% versus 20.3%. Tata Chemical, again the profit has slipped 27%. EBITDA down by 11%. For RCF, Alcargo, all disappointments there. And even for LIC, wherein the first half value of the new business is down 10%, and the APE also has slipped about 10.5% or so. So these are a couple of stocks which are in focus this morning. It's pretty a listless start. Naresh, pretty much what you already warned us of, that it's going to be a listless, low participation kind of week, with tomorrow already being a trading holiday.
So generally the next day post Diwali is a lackluster, but given that we have one more holiday, expecting it to be much more boring relatively, we tend to fade off whatever has been done on Diwali day. So I think we have faded off quite a bit of it, and again we pause for the day.